as well. This is being recorded and for other shareholders, so if you'll allow me a little indulgence, I'll just take us through some of the basics because I'd like everybody on the same page of our business. So most certainly, who are we? We're a regulation technology company. That's really our space, from transforming compliance from hire to retire. So it's a wide segment, and our purpose is, in our view, fairly simple: make compliance effortless. And we find ourselves a great luxury being in a market where compliance is more complex every year. The standards are higher, the ATO brings in higher standards, and our job is to make that as effortless as possible for our client base. We aim to do that by streamlining onboarding through to pay and benefits. But our business right here today starts with superannuation, and we'll share a little bit of deeper insight into that. I'd like to encourage people to think about our business in a really simple way. We really do three things. We move money, so super, wages, disbursements. We move credentials, people's license, their tax file numbers, their identification, industry checks. And we move messages, which is possibly the lesser known but the more complex of our business, which are the highly regulated messages that go to and from either employers or other parties to the ATO and other regulated bodies. So that's really at the core. It's a simple business model, but what makes it powerful is that common stack goes across far more subsectors or segments of compliance than just super. So we'll talk about that a little bit more as we go through. But each compliance moment that we talk about in the business shares the one common platform. When we build it once, core to our business is that same compliance moment can be served for us profitably, whether it's the largest organisations in Australia or a small business with 1 to 2 employees. Sorry, there we go. So the platform today, just to give people context of where we're at. So every employer, every industry is really our target market. So we particularly look at ubiquitous compliance moments that touch every employer and every employee. Hence why we started with super. Everyone must get paid their super. It's one of the most highly regulated events. But also onboarding and compliance, bringing someone into an organisation, making sure you've got the correct tax file number, making sure you comply with the stapling rules around aligning them to their super fund. These are the areas which is core to our business right here today. But what's important about that is our building block to grow into the other major compliance segments. We see each of those segments being of similar ilk and value to the superannuation segment that we're addressing today. So extending onboarding, moving into pay. So the processing of wages, paychecks, ensuring people are being paid correctly, the messages to the ATO around single touch payroll, for example. And then into credential verification, the passing of such highly sensitive PII information around not just people's licenses, but medical licenses through to visas and passports and right to work. All of this information is quite consistent with our core platform build and deployment that we're rolling out right now today across the super industry. So really the way to think about our business is today we're in super, that's our dominant segment, but really opening the door to expand our platform and our reach into each of those other segments across Australia. So a one-stop shop for employers. So I thought I'd touch a little bit on our business model because it is a little unique. It's what's enabling us to get scale much, much faster than a traditional, perhaps, SaaS company that has to sell business to business. So the first being through partnerships. So that is taking our singular platform and white labelling the platform and going to market with large partners. Obviously, 2 major contracts as an example, but Australian Super and Rest, each servicing an enormous base of Australians, but able to take our platform out to that market, with Wrkr still being a core component part to allow those businesses to subscribe to our wider set of services beyond just super. And then, of course, direct to employer, where we service with our own Wrkr brand in the market. Traditionally, or in the FY25, running an ARPU of around $8 directly. Importantly, in our partnerships, secured to date 5 million contracted users that we are currently in the process of onboarding. So from a scale perspective, you'll see us moving from around our 600,000 direct customers to a much, much higher base of customers over this financial year. So I said starting with super and why super, some of it's, there's some important characteristics for this. Firstly, it's a very high trust market. The amount of information that we are moving in super is lengthy, from the payroll, the company, your employer ID, your tax file number, your date of birth. An enormous amount of information is required for super to be paid and for ATO to see that as done in a compliant fashion. So that's the building block of our business. But to win in that market, obviously your technology has to be incredibly trustworthy. Security has to be of the forefront of your mind. It's probably worth pointing out that the three, in the top 10 super funds, they represent about 70% of all member accounts in Australia. Wrkr's software is currently being implemented or is implemented in the top three, the largest in Australia by a long way. And that is a core underpinning for our business as we move forward. The regulatory tailwinds is critical. Any large sector to achieve the growth we've achieved wouldn't be possible without regulatory change. And of course, that change has come in a couple of forms. Payday super, as we can see that legislation moving through its process of passing through. It's just worth touching on, while we wait for final approval on the legislation, the actual standards in the industry, SuperStream standard that we live within, was already passed by the Deputy Commissioner and effectively is into rule. So the progress of this industry is moving very, very quickly towards the payday super date. And that's been very helpful for us. But we actually see a range of other events coming down the track that will follow on from that, from government, to continue to improve the compliance standards. The third is partnerships accelerate growth. And we have to be really clear here. Our partnership with MUFG, the prior Link group, has been a very strong partnership. It's not just a go-to-market and sales partnership. We have a deep integration between our platform and their Aspire platform, which is the registry platform for about 60% of the Australian superannuation market. We're fully integrated into their customer care capabilities, their technology, and also the training of all of their staff to be able to service and support users on our platform. So that partnership has really fueled our growth to date. And they have obviously other larger iconic players that we will seek to address over the next 12 to 18 months. And the network effects are really starting. I think, launching with those leading funds, we are now seeing inbound calls. As a small company that was perhaps not on the radar a couple of years ago, for the first time, we're seeing our pipeline. We're responding to superannuation funds who are wanting to close that gap for payday super, and that is a very strong signal for us. So the growth initiatives, and they are biased predominantly towards superannuation because that market is right here and right now. And I'll just touch on these six because they are a short window opportunity, but a very, very large opportunity. So number one is expanding our super. So off the branding that we're getting, and obviously early versions going live into market in December for REST, and so early cohort groups, it's the same platform, going live in December, sends a very powerful signal to the market that you can be ready, and there is a strong proposition in that market, and that is actually driving that conversation with other super funds. So as many super funds as we can bring on within that timeframe is our current focus in the business, because we see this as a set window. I think the window may be longer than 26 because the ATO is currently focusing on holding the fining regime until the end of FY27, which gives a little bit of extra time. So it isn't a set end date. So we think we will still grow beyond this year. However, what is in front of us is substantive. And that really is in most part through partnership, but actually direct as well. The second area is payroll, extending those payroll partnerships. Payrolls are the last at the table on Payday Super, and they have a very limited window to solve for their clients' requirements. And we've seen an influx in payrolls wanting to now work with us, and our team deepening our integration direct with payrolls. Examples such as SAP, some of the premier platforms in Australia. And that is an area where we will focus more and more on in that growth. The next couple of areas, ATO Small Business Clearinghouse, some just shy of 1 million employees in Australia are serviced by that. 275,000 businesses at last count are on that platform. As of October, accountants can't put a new business on the ATO's free clearinghouse. And as of the 30th of June next year, that clearinghouse is closed. Has not been updated for Payday Super, and the market's been notified. So all of those customers are seeking an alternative offering and will need to take a commercial offer in the market, of which there is actually only a small group of companies that have the capability to serve that segment. So we see that as a high growth area, and believe we're quite fortunate. Our software is geared to be quite low touch and low service cost, which makes us quite an appealing segment to our organisation. Migrating Click Super, our own company, onto our core platform. That is one of the major events going on, but that gives us an opportunity to upsell and cross-sell other services to take an opportunity to increase that $8 ARPU that you've seen. The other two areas, there's genuinely an opportunity to increase ARPU opportunities right now, and we are looking at target acquisitions and bolt-on acquisitions. One of the key strengths is in the super industry, having our software platform out there with a subscribe to other compliance moments, and being put in the front of between Australian Super and Rest alone puts us in front of the eyeballs of nearly 130,000 payroll and HR officers. That is a unique growth opportunity for us and an area you'll see us explore in parallel with our core super functionality. And then expanding our addressable moments. We will continue to work with early adopters just to trial and make sure that we've got price points right and propositions right. So they are some of the signals you'll see. As you can imagine, that's a very busy, really 8 months ahead for our organisation, but we have, as you'll see in a couple of slides, we have been tooling up to do that. I just want to clear on the rollout right now in the business. We are obviously right at go stage with our two biggest clients in Rest and Australian Super. You'll see the yellow is indicative of that early preparation work. That orange portion is us actually working with them as they take the software out to all of their customers. It's a replacement of an existing software in front of their customers. So it is not a sale on their part, it's a swap out. So as they swap out their existing technology, you'll see with the green teal that we will then start to see our transaction revenue come online. So you'll see early transaction revenue at the back end of this quarter as we start the go live through end of November, December, January, February. I would say a lower amount because we're moving through a Christmas period. Rest is a dominant retail player, unlikely to see great activity while they're in the middle of hiring or stock take, is what I'm told. And Australian Super, very well staffed up, an aggressive plan, both of them to be completely live across their customers. So all of the 5 million users onboarded is our expectation at this point within the financial year. So the following financial year, then full transaction flow from that customer base. Obviously, we have a very healthy pipeline right now, and we're working to close on that pipeline, acknowledging the fact that the year's getting shorter. So the amount of time to bring businesses on means it's working faster and sharper. The good news is Australian Super and Rest have done a fantastic job dotting every I and crossing every T. So it's not a case of change on the platform, it's a case of rolling out. Our own Wrkr platform and small business clearinghouse, that is just a constant win turnover rate that we'll pursue. So that gives you an idea of the workload and the pathway to the transactional revenue that really underpins our ARR into FY27. To achieve that, obviously a lot on. There's kind of 4 major areas that we are making a substantive investment. Some of this off the back of what we had committed to in the capital raise, some additional investment right now because we think it is the most important time. The first is around security, site reliability, quality assurance. So that is bringing in additional manpower resource to ensure that we are going through all the highest degree of testing standards. We already do work today with each of the major funds, MUFG, and each of the major funds has a professional services party working with them. It makes it fairly robust, but we like to be ahead of that curve. So that's an area we'll invest in to win Australian Super and Rest and not be anything but perfect, we think would be the wrong move for the type of growth we're seeking in our company. The second area is in project delivery. We just have as you can see from the 6 growth initiatives and the current activity, the ability to deliver on these projects and meet our commitments is critical. So we are increasing our resources to manage some of the more complex elements of those, data migrations, for example. Marketing, we are a low marketing company today. I think done pretty much on a shoestring budget would be an understatement. That has been fine because we've been spending our time hand to hand with the biggest funds. That's not the way we're going to market for the small business clearinghouse customers. You will see our brand start to be far more active in market as we address that market and the removal of the small business clearinghouse. So marketing effort around there and just payday super awareness. We are still struck by the fact that some of the more sophisticated companies in Australia are having project and meeting room and meetings only as recently as this week to prepare themselves for payday super. They do not have a large window. That is a great opportunity for us. It highlights the importance of us, I wouldn't say over-investing, but investing appropriately on the security and quality assurance, because we will be drawing more attention to ourselves as a company. The final is you'll see us increase our costs, bringing on some labour flexibility models, so outsourcing models, where over the next 8 months, you'll see a duplication of resource in our business as we bring on and educate third parties to make sure that we've got scale and burst capacity. That is, we think, fairly important because it's a lumpy market, but it's pretty busy right now for us, so we need to be in that position, particularly as we come to the back end of the year. Obviously, these additional expenditures, they're going to increase Wrkr's negative EBITDA in FY26. Draw your attention, you would have seen in the quarterly a positive cash flow quarter. Obviously, we want to set expectations correctly. We're bringing on that investment now. There's a lag in some of that investment in labour. We will be investing hard this year, so would not be expecting positive quarters. So from that end, I'm going to hand to Karen, who'll run you through the financial highlights, and then we'll have open Q&A. It's got to look at the screen itself.
Thank you, Trent, and good morning, everyone. Trent spoke quite well to all of the financial things that we've been doing in the business. So I wanted to, just on the back of what that next year looks like, to just reassure investors and the market that we're not spending frivolously. As you've heard, we've got so many initiatives and so many opportunities in front of us that we're still maintaining our really tight cost control that we've maintained up to date, and that will continue to happen over the next year. But the opportunities there, we've heard from the market, we heard from our investors at our capital raise that this is the time to go. So make it work. So the hive of Wrkr bees is definitely busy at the moment delivering. And they're not only delivering on our existing contracts. So Australian Retirement Trust continues to have development work that we're focusing on that will bring some good revenues this year. They're still doing their employer online to Beam contract and getting Payday Super ready. We'll be assisting them with that. And obviously we're rolling out to Rest and Australian Retirement Trust. So they're big jobs in themselves. They cost us a fair amount of money. We've brought in some more project delivery teams to help us make sure that that is going to be what we achieve, make sure that we're fully prepared to make sure that's a success. We've had talent acquisition in the last year in FY25 increase from 44 to 63 people. As of last week, it was 70, and I think today it's 72. So yes, we're really scaling up our resourcing quite quickly, and that's in areas right across the business. So as Trent mentioned, there's quality assurance, there's project delivery, there's business analysts, there's engineering capability, there's our user experience staff. So that team is we're all just working as hard as possible at the moment to make sure we're meeting our contractual obligations and to take advantage of our great opportunities ahead. Okay, so the financial scorecard in FY25 we had a good year. Operating revenue was up, cash flow was positive, and our annual recurring revenue was up all over 10%. So it's just showing the trajectory, even without actually going live with the platform, that we are showing in terms of the development and implementation fees, the way that we're managing cash and cost. And as Trent mentioned, we'll see the transactions start to slowly come on before Christmas with the Rest rollout, and then expect to see in the second half of the year, the cohorts that Rest and Australian Super are choosing to bring onto the platform really start to ramp up the number of users on the platform, which means we should have a really great start to FY27. At that point, we should start to see, our costs start to level out. We will move from that more implementation and development phase into the kind of operational phase. So, we're excited to get there. This year, we also had the capital raise. Well, in August, we had the capital raise. So that set our balance sheet up well. We don't have any other debt. We've got some small debt on insurance premium, but the balance sheet is really strong to be able to do all of these things. We've got good cash in the bank, and we've identified, that these are the things we need to invest in and spend money on now, but also making sure that we keep the cash reserves there for the things that we said we would do in the capital raise, such as an acquisition or a build in-house compliance moments, which would be revenue accretive for the business in terms of new compliance moments. So for the quarter, I'm not sure if anyone got to look at the quarterly report this morning before they came in. We did have a great quarter that Trent alluded to, positive operating cash flows again. And we are, really happy with that. That was on the back of, we did have some overdue invoices. So we saw that cash come in of $400,000 in the quarter, which did help that position. We also had one of our largest platform as a service customers have their annual license renewal, which is around $220,000 in the quarter. So that helps the position of the quarterly this quarter. As Trent mentioned, and as we've been saying, we're spending now, we're investing, we're putting money into all of these initiatives because we have a pretty short window to make all this happen and deliver appropriately and properly. So we'll see the cash flows over the next 3 quarters most likely be negative, unless we can convince all of the funds to bring on all of their people, all of their users at the same time. But we don't see that happening. It will be a general progression into the end of the financial year. Okay, I've already talked to the capital raise. So we'll continue to monitor our cash closely. We've always had tight management around that. We're not doing anything frivolous. And making sure that any investment we make is for the benefit of the company and the strategic growth. That's all from me.
Wonderful.
We'll pass over to
Thank you very
anyone
much. For any questions. Yeah. Floor is now open for any general questions or comments. Are there any questions or comments on the management of the company?